Welcome to ET Now. You're watching Your Trades with me, Kanishka Sarkar and Ashesha Advaryu. Well, here's your window to track all that made headlines today and was buzzing in trade. Well, Ashesha, the Nifty ended in red but held steady, closing about 50 points away from the 25,000 level.
Well, absolutely. In fact, we gave up most of those morning gains to end below that 24,950 odd level. But remember, banking and financial stocks were gaining in trade today, bucking the overall trend. So Nifty banking index ended with some amount of gains in today's trading session, although they ended significantly off from the highest point, ending near that 55,420 odd mark. IT sector was impacted today on account of negative news flow that came in from the United States. We had Nifty IT index, which is down over 1% in trade today. Emphasis, Infosys, Coforge, Tech Mahindra, TCS, all of them falling anywhere between 1 to 3 odd % in trade. On the flip side though, real estate stocks were gaining in trade today. Nifty real estate index was the biggest sectoral gainer. We had the likes of Raymond, which was up 5%, Phoenix Mills, Oberoi Realty, DLF, all of them gaining anywhere between 3 to 5 odd % in trade today. But we now have a guest joining us on the show. Amardev Singh, Senior Vice President Research at Angel One, is now joining us to make sense of how the markets look like and what's the outlook for the next trading session. Amar, thank you so much for taking your time out. First, on the index level, help us understand what's the outlook. Today, of course, we saw a tepid session as far as the index level is concerned, but could we cross that 25,000 mark tomorrow?
Yeah, good afternoon, and thank you for having me on the show. So, see, we need to understand that markets also are living beings, so they also need to breathe at times and take pause. And that's what we are witnessing post the sharp rally which the markets have demonstrated. What is definitely heartening is that we are seeing across sectors positivity, and also if you look at the advance decline of today as well, so advances are significantly higher as compared to declines, almost double. And so clearly that, and the global cues are also positive. So I would say that 25,000, definitely that's within striking distance, I would say. And it did touch those levels, but closed below that. So overall, the trend remains positive, but yes, market needs to sustain over the 24,800, 25,000 level consistently for an upside rally towards 25,300 to 400 on the upside. As far as downside is concerned, I would say somewhere around 24,800. That's a crucial short-term support zone. Looking at the technical parameters, the intermediate-term trend is very strong. Short-term trend is definitely positive, but there's some loss of momentum since the rally which began from almost 22,000 levels. So the indices have gained significantly. Long-term trend, yes, now at these levels, there would be some resistance, some profit booking also coming in, but overall the trend still is positive. So buy on declines is what's recommended as far as Nifty is concerned.
All right, buy on declines is your recommendation, Amar. Then this is very good afternoon. First of all, this is Kanishka also joining in. Before we track more, I want to first understand which are the stocks that you have picked out for us today. What are your top picks?
Yeah, so the first stock is from the pharmaceutical space, and that's Natco Pharma. So what we are seeing here in Natco Pharma is that, see, the stock had corrected significantly from almost 1640 levels in September, and currently it's around 860. The stock made a recent low of 725.26. It seems that the stock has bottomed out, and there's a possibility that we could see the stock rallying towards the 950, 1000 levels. So this is one stock one can look at from a short-term perspective, buying at the current levels with a stop loss of 793 and target of 969 on the upside. And the second stock to look at is Blue Star. So here the stock, if we see, the stock has corrected again significantly from almost 2400 levels. Currently it's around 1600 odd levels. It seems to have bottomed out. There's some sign of positive on the charts because we've seen some significant volume increase on certain specific days. And also it's around very crucial support zone. So here also we can expect a pullback. These are more or less, I would say, some pullback strategies as of now. So this is the second stock one can look at, buying at the current levels, around 1620 odd levels with a stop loss of 1537 and a target of 1745 on the upside.
All right. Thank you so much, Amar, for those stock picks. With that, we'll let you go. But with that, it's also time to look at some technical charts. Then Srishti is standing by with the stocks that were buzzing in trade. And how are the charts looking like for those stocks, Srishti?
Well, yes, we are back with the breakout and the breakdown stocks, and two of the stocks that we have got for our viewers today, both are from the breakout side, because in this particular market as well, two large caps were holding up well. First up, let's have a look at Divi's Lab, because this is the counter that we were seeing on the technical front on the charts. If you see, then Divi's Lab was indeed one of the stocks that was surpassed from one of its key resistance level as well. Well, of course, we have seen the earnings upgrade, or rather good set of earnings coming in for this particular counter, and indeed that was the trigger for this counter. But technically, if you will see, 6300 was one of the key resistance coming in from Divi's Lab, and the stock managed to move above those levels. Closing was close to that 6600 mark as well, very well above its 20-day moving average as well. Other than that, it was also supported by a long build up. So this is the first technical stock that we have been tracking. But next up is two-wheeler majors, Bajaj Auto. Let's have a look at that. This is the weekly chart that you are seeing for Bajaj Auto. All while we have been seeing that this particular uptrend was actually reversed, and Bajaj Auto was continuously trading below its 20-day moving average. But in the last 2 weeks, like last week particularly, the stock managed to move above its 20-day moving average, indicating for a trend reversal. For this particular week, at the start of the day one, this momentum was seen to be continuing, more than 4% jump coming in on this counter, very well supported by a long build up as well. So that's another stock that we have been tracking. So these are the two technical stocks on the breakout side. Back to you.
Bajaj Auto and Divi's Laboratories. These are the two breakout stocks that Srishti is spotting for us today. Thanks so much for joining with us with all those details. But shifting focus then, Manish Sontalia, Director and Chief Investment Officer at MK Investment Managers, believes that two-wheeler space is best positioned in the auto sector. Listen in as he shares his rationale.
No, the two-wheeler space, in fact, is going quite well. I would believe, you have roughly around 2 crore two-wheelers getting sold in FY25. And primarily the numbers per se, for even if you look at, let's say, Hero MotoCorp or TVS or a Royal Enfield, they're coming pretty decent. And I think within the automobile space, the best positioning happens to be for the two-wheeler space. And now that, we are talking about a free trade agreement with the US, then obviously the autocom space also, particularly the ones catering to the export market, is likely to do quite well. And again, valuations, etc., out here have come off quite a bit. But it's actually a preference of autocoms and two-wheelers over four-wheelers at this point in time.
All right, that's the expert view coming in on the auto space. Now, time now for an news update then. Now, Maharashtra's new housing policy is likely to be launched by the end of this month. Promoting affordability and sustainability remain the key focus areas of the government. My colleague Anurag Shah is joining us with all the exclusive details there.
After a long wait, Maharashtra's housing policy is finally set to see light of day. After a gap of 18 years, Maharashtra is all prepared to launch a new housing policy. The last housing policy was launched in 2007, and we have seen just before the Model Code of Conduct announced in state of Maharashtra. In October, Maharashtra government came up with a draft notification of new housing policy, and the housing policy is set to benefit all stakeholders. The focus of housing policy is on affordable housing, to give incentives for green housing, to give an incentive for redevelopment project, and for developers also there are proposals for the premium rationalization. So as per our sources, by month end, Maharashtra government is all set to launch the new housing policy. The policy first will be brought in the cabinet, and after the cabinet decision, the cabinet will give a final note for the new housing policy. There are other as per our sources, there will be a dedicated redevelopment cell to be set up within the Mahada for the redevelopment project, especially for the city like Mumbai. Then a project to get a support through TDR, premium rationalization and incentive will also be the part of new housing policy. Single window clearance system to be implemented to ease project approvals, and policy also aims to accelerate some slum rehabilitation in urban areas. So these are the main focus areas of housing policy, and Maharashtra is all set to launch new housing policy after 18 years.
New housing policy is set to be launched in Maharashtra after 18 years. That's a big ET Now exclusive. But shifting focus from real estate sector to the telecom sector then, and a big blow has come in for Vodafone Idea as Supreme Court has rejected its AGR waiver dues plea. My colleague Sumit is now joining us with more details.
Well, it's a shocking development for telcos. Supreme Court today rejected the AGR relief plea made by Vodafone Idea, Bharti Airtel, in fact, Tata Tele also. So, in a way, it is now the last step for the companies because they wanted a Supreme Court to review the overall thing and some way get government helping them. It started like this, that the council, Mukul Rohtaki, wanted the case to be adjourned till July, but judge said no, it is not possible. Then they said, judge said that government, if it wants to help you, it can help you, we will not come in the way. But they said government is not helping, it owns around 50%, still it is not helping. And then Supreme Court said we can't do much about it. So on that note, the overall petition got rejected. So it's a shock coming for Vodafone Idea and even Bharti Airtel. Even the Supreme Court judge calls it shocking, the petition. So in a way, it was clearly not taken on the way since the beginning that they may get some relief. So finally, it came like this, that it's not going to be any relief for Vodafone Idea on this front. Earlier, government had also rejected Supreme Court. In Supreme Court, Vodafone Idea said that it is not in a very good shape. It can't survive for a long time without any help. Well, recently government converted dues of Vodafone Idea into equity, so it owns around 49% in Vodafone Idea already. On that note, Bharti Airtel also went to Supreme Court demanding the same. So it's a lot of trouble brewing in telecom sector, and Supreme Court clearly is not no help for them currently.
All right, thank you, Sumit, for getting us all those updates. In fact, if you look at the stock, Vodafone Idea ended about 8.5% lower in trade today after the Supreme Court rejected its AGR waiver dues plea. But apart from that, several other stocks in news today. In fact, Rabinder is standing by with the list of all the stocks that were buzzing in trade today.
Well, on back of strong Q4 earning delivery is in focus, where company has announced its Q4 number, and company's revenue saw an uptick of 5.5% year-on-year basis, and company also reported a profit of rupees 72 crore as compared to loss of 68 crore year-on-year basis. And company in the con call highlighted that overall share of the market is going up pretty rapidly, and they have maintained market share despite sluggish growth in parcel volume. Moving to next, Divis is also in focus on back of Q4 earning, where Divis reported a revenue at rupees 2,585 crore, which saw an uptick of more than 12% year-on-year basis, and company's net profit also saw an uptick of more than 23% year-on-year basis at rupees 662 crore. And if we talk about EBITDA margin, then company reported EBITDA margin at 34.3%, which was up by more than 250 basis point on a year-on-year basis. And Macquarie has maintained their outperform rating with target by rupees 7,400. Moving to next, IndusInd Bank is also in focus, where IndusInd Bank has signed an MOU with AIC stepping next to 8 startups. Apart from this, Bajaj Auto is also in focus, where company has informed that their subsidiary has entered into a loan agreement with 3 banks for availing loans of aggregate number of euro 566 million, which is equivalent to 5,431 crore. And lastly, on back of order win, KEC International is in focus, where KEC International has won one order of rupees 1,133 crore in T&D segment.
Host of stocks in focus, which were in focus on the back of news flow, but STL Technologies, that was another stock which was down 4.5% after it reported its numbers. In fact, we spoke to the management. Ankit Agarwal, managing director at STL, shares that the enterprise's data centers are expected to drive growth in FY26. Let's go across and listen in to what he had to say.
we are looking forward to an improved performance in the coming year. If you look at the performance and the improvement that's happened quarter on quarter, you clearly see that trend in the positive trajectory, and including into quarter four itself. In quarter four, we had our best performance from a EBITDA percentage and absolute number. One of the big drivers for this will be in terms of growth, particularly in two sections. One is in the North America market, which we clearly see continuing to be very robust and growing in the coming year. And the second is our focus and doubling down on enterprise and data centers, which we also see can be very, very exciting for the company going forward. As our pipeline improves within this quarter and next quarter itself, we will see some more healthy order booking. We are very confident that at any point we will have visibility of between 12 to 18 months of orders going forward.
All right, that's the word coming in from the management of Sterlite Tech. But moving on, with no major sugar price hikes, Avantika Saraugi of Balrampur Chini Mill says that they expect an annual revenue of 2,000 crore rupees. She also adds that they're focusing on environment-friendly projects. Let's go across and listen into what she had to say.
So I don't see a very significant, hike coming up, but the prices should remain strong. This is what I can say. We are, we are holding a very, very good stock. I think it should work out well for the next few months. Let's put it like this on the sugar side. Now coming to the project, it's progressing absolutely as per schedule. We should be absolutely on point in terms of timing. Revenue should be revenue. We've already given guidance. It should be around 2,000 crores of annual turnover at 100% capacity.
That's the word coming in from the management of Balrampur Chini. But shifting focus from sugar to real estate then, and speaking about growth, Pavitra Shankar, who is the managing director at Brigade Enterprises, says that they are expecting 15 to 20% growth on a year-on-year basis. Listen in to her guidance on acquisitions going forward.
Going forward, I think we have consistently been saying that what we look for as an organization is to grow at this 15 to 20% year over year. Sometimes we much surpass that, as we did last year. Sometimes, we may just about touch it. It really depends on getting approvals in time, launching the projects and seeing the kind of absorption that we have been able to see over the last few years. And as far as things go and as far as our outlook is concerned, all of the fundamentals are still in place for all our businesses: residential, office, retail, and hospitality. So from that sense, we are quite confident that we'll be able to continue with this kind of growth of around 12,500 to 13,000 crores. So from that perspective, business development and land acquisition is a constant endeavor for us. We are looking to do this across multiple different geographies and multiple lines of business as well, office and residential. And you would have seen those projects get announced over the last month, especially in the last week or so.
All right, then moving on, e-governance solutions provider Protean eGov slumped in trade today after not being shortlisted by the Income Tax Department to design and develop PAN 2.0 project. Now, the company had participated in the RFP bid proposal which was technology revamp, including design development, implementation, operations, and maintenance of PAN systems. Varun joins in with all the details.
Definitely. So it's a big blow for the company because, see, if you look at the Income Tax Department has actually issued a notice for request for proposal for the PAN 2.0 services, and the company has also participated in the request for proposal bid. But the company was actually not shortlisted by the Income Tax Department. In fact, the Income Tax Department has said that they do not consider the company favorable for the next RFP selection process. Now, if you look at the overall PAN 2.0, it had a financial outlay of around 1,440 crores. If you look at the overall PAN business, it has a significant contribution to Protean eGov overall revenues. It contributes around 50% to the company's revenues, and Street was expecting that the company would get a good amount of business from the PAN 2.0 service, but the company has not been shortlisted. Now, analysts on the street are actually expecting that this would create medium-term uncertainty on the PAN business. In fact, they are saying that for FY26, the impact might be muted, but they expect significant collapse in the overall revenue streams in the next 2 to 3 years. and also they are seeing a big decline in the overall revenues in FY27, because if you look, this overall PAN business is actually also contributing to the overall cash generation of the company, and the cash generated from these services could have been used for new initiatives. So actually not getting shortlisted for PAN 2.0 creates a big uncertainty for the company in the coming years, and that's the reason Street is worried about this, and that's the reason you're seeing this type of reflection on the stock price, which is down by around 20%.
The stock was locked in lower circuit of 20% on the back of this news flow. But shifting focus, Moodys has downgraded US credit rating from AAA to AA1, citing ballooning debt and rising interest costs. Gaurav is now joining us with more details.
Moody has now went ahead and downgraded the sovereign rating for USA from AAA to AA plus. Now first AA1. Now let's understand. Now Moody actually AAA was actually the most pristine rating that they had given to any country. And when we look at the history, it was assigned in 1919 for USA, and after that this is the first time when Moody's has actually cut the rating to AA1. Now let's understand what has actually happened. They are actually concerned about the rising debt, because as per Moody's, the debt is now clocking around $36 trillion for USA, and this can actually put some pressure going ahead. Other than that, what they have also said is that this can actually also complicate and put some pressure on President Trump's all the attention and intentions about the rate cuts, and at the same time the intention of sending a ripple effect on the global markets. When we talk about Moody's history, let's also not forget that it is actually the third rating agency and the last rating agency who is actually cutting the US sovereign rating, because already Fitch and S&P had cut the rating. When we talk about Fitch, they had cut and downgraded the rating to AA plus in August 2023, and S&P also cut this rating in 2011. Now what Moody's is also saying is that when we talk about the overall impact going ahead, it actually reflects the increase over more than a decade of government's debt and interest payment ratios that actually increased. And at the same time, what experts are also believing is that with this we will see two impacts. First is that the interest rate bond yields will actually go up, and second is that the impact of rate cuts can actually something to be watched out for.
Gaurav, thanks so much for joining us with all those details. But that's all the time we have on this edition of Your Trades. Don't go anywhere. More news and updates will come up on the other side. Stay tuned.